Internal Control for Audit Planning and Fieldwork Part 3 by Jub Jub from AC110-5B. For the content of internal control, we have 5 of it. The first one, management and auditors' responsibilities. Second one, objectives of internal controls. The third one, components of internal control. The fourth one, evaluation of internal controls. And the last one is assessment and documenting and understanding of internal controls. Definition of internal control based on International Standard on Auditing 31 is the process designed and effected by those charged with governance, management, and other personnel to provide reasonable assurance about the achievement of the entity's objectives with regard to reliability of financial reporting, effectiveness, and efficiency of operations, and compliance with applicable laws and regulations. It follows that internal control is designed and implemented to address identified business risks that threaten the achievement of any of these objectives. Management and auditors' responsibilities. Who is responsible to maintain the internal control system? Management or auditor? Auditor, they will evaluate and ascertain the ICS in deciding the level of testing required. A good internal control system will reduce the amount of audit work required. Management, they will be responsible to establish and maintain ICS. Auditors concerned about internal control. Auditor needs to understand the internal control systems of an entity in planning the audit. If the internal control system is strong, the financial statements and other data generated by the entity will be more reliable, and thus the auditor could possibly reduce substantive tests. If the internal control is weak, the auditor needs to perform more substantive tests and detailed checking during the audit. Management's concern about internal control. Internal control provides a way for management to meet its agency responsibilities. Internal control system ensures that the information generated for decision-making purposes are reliable. Effective internal control can ensure that assets are safeguarded from unauthorized use. Financial records are reliable to permit the preparation of financial information.
Next, I will present to you guys about internal control objective. First objective is reliability of financial reporting. As we know, management has responsibility to preparing statement. Management has both a legal and professional responsibility to be sure that the information is fairly presented accordance with reporting requirement of accounting framework. The objective of effective internal control over financial reporting is to fulfill this financial reporting responsibilities. Second, efficiency and effectiveness of operation. Internal control provide an environment in which its manager and staff can maximize the efficiency and effectiveness of their operation. An important objective of this control is accurate financial and non-financial information about the company operations for decision making. Last but not least, compliance with law and regulation. Internal control helps to ensure the business is in compliance with the many federal, state, and local law and regulation affecting the operation of our business.
So the next part is components of internal control. There are 5 components of internal control that management designs and implements to provide reasonable assurance so that its control objectives will be met. Each component contains many controls, but auditor focus on those designed to prevent or detect material misstatement in the financial statement. So the first one is control environment. It includes governance and management's overall attitudes, awareness, and actions regarding internal control and its importance in the entity. Control environment sets the tone of an entity and influences the control consciousness of all personnel and is the foundation for the other components. The element includes integrity and ethical values, commitment to competence, board of director or audit committee participation, management's philosophy and operating style, organizational structure, and also human resource policies and practice. The second one is risk assessment. An entity's risk assessment process is the way of identifying and responding to business risks. Once it is identified, management must consider their significance and how it should be managed. Management may introduce plans, programs, or actions to address specific risks or accept a risk on a cost-benefit basis. Third, Control activities. Policies and procedures established by management is to ensure that its directives are carried out. Control activities should be distinguished from accounting system. Control activities are added to ensure accounting system procedures, accurate and reliable data. Types of control activities include adequate separation of duties, proper authorization of transaction and activities, adequate documents and records, physical control over assets and records, and also independent checks on performance. Last but not least, information and communication. The information system, or also known as IS, is to initiate, record, process, and report the entity's transactions and to maintain accountability for the related assets. An effective IS should consider establishing records and methods that include: first, identify and record all valid transactions; second, resolve incorrect processing transactions; third, process and account for system overrides; fourth, transfer information from transactions processing system; fifth, capture information relevant to financial statement for events and conditions other than transactions; and last one, present transactions and related disclosure properly in the financial statement. The last component of internal control is monitoring. It is a process used to assess the effectiveness of the performance of internal control. It involves evaluating the design and operation of controls and taking corrective action where necessary. Management may monitor controls through ongoing activities such as supervision or supervisory activities or separate evaluations. Internal auditors also contribute to the monitoring process.
Next, I will be moving on to the evaluation of internal control, which is where we evaluate whether the design controls are being implemented using the 5 common methods, which is first, examine documents and records. The 5 components of internal control are involved in the creation of documents and records. Examining said documents allows the auditor to evaluate whether the information in the flowcharts and narratives have been implemented. Second is to make inquiries with client personnel. The auditors should conduct careful questioning of management, supervisors, and staff to explain their duties, to see if they understand their roles and its correlation with what is being described in the client's control documentation. Third is to observe entity activities and operations. When the auditors observed clients' personnel carrying out day-to-day business operation, this will improve the auditor's understanding and knowledge that the controls have been implemented in the business. The fourth method is to update and evaluate auditors' previous experience with the entity. This is to determine whether previous controls that were not operating effectively have been improvised based on the auditor's prior experience with the company's internal control. Lastly, is by performing walkthroughs of the accounting system. Walkthroughs is where the auditor will choose one or more transaction type document to trace the entire accounting process. It combines observation, documentation, and inquiry to assure that the controls designed by the management is being implemented at each stage.
Methodology for study of internal control. We have 4 steps may be identified in the study of a firm's internal control. Firstly, preliminary review. Second, gathering information, understanding, and preliminary evaluation of controls. Third one is test of control, and the last one is final evaluation of control. Obtain and documents understanding of internal controls. We have few types of information gathered by the management to assess and document internal control effectiveness. Firstly, narrative is a written description of client's internal control. A proper narrative of an accounting system and related controls describe 4 things. Firstly, the origin of every document and record in the system. Next, all processing take place. Next is disposition of every document and record in the system and an indication of the internal controls relevant to the assessment of control risk. Secondly, we have flow charts, which is an internal control flow chart is a diagram of the client's document and their sequential flow in the organization. And an adequate flow chart includes the same 4 characteristics as I mentioned before in the narrative. Next is internal control questionnaire to ask a series of questions about the control in each audit area. And the next one is document for policy manuals and other paper and electronic forms.